Hello, everybody, and welcome to Commodity Culture, where our goal is to make you a better investor in the commodity space. My name is Jesse Day. Before we dive in, as always, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's guest is the CEO of Dryden Gold, an exploration company focused on the discovery of high-grade gold mineralization. We're going to be discussing the gold market and the gold mining sector, along with, of course, getting an update on Dryden Gold. It's Trey Wasser. Great to have you back on the show.
Hey Jesse, how you doing?
Doing excellent, thank you. I want to start with your current view on the gold mining sector, because if we look at gold itself compared to the GDX ETF, which holds a basket of all the miners, right now both are up around 29% for the year. Now, many expected the miners to far exceed the gold price at these all-time highs. They expected a mania in the gold stock. So what do you think is going on here?
Well, look, I think that if you are in the right stocks in the gold sector, it's been much better than 29%. Off of its lows, the lows in February of this year, Newmont is up from $30 to hit up, I think, as high as 55. It's around 52 today. Kinross from $4.80 to $9, almost, I think it even touched $10. Agnico Eagle from 46 to 84, and Alamos from 11 and a half to 20. So, really some spectacular gains if you're in the producers who are really taking advantage of this. And what's different, in my opinion, and why I'm so bullish on these big producers is that, historically, when gold prices went up, they did a lot of stupid things. They'd go and make big acquisitions that didn't make sense. They would open up lower, lower grade mines and mine everything they could. And this time it truly is different. And you look at the companies I just mentioned; they all have decent or really good growth profiles, which are organic. So most of those companies are generating their projects from within. They're not looking to go out and purchase. Newmont, for example, is actually in the process after having done the Newcrest. They're actually, selling off some of their non-core, lower grade, and so they're working on keeping their costs down and their margins high, and just growing their production. And these gold prices, these companies are printing money, and on the cost basis from anybody who invested early in the year, you're seeing 3 to 4% dividends. These companies they're going to be generating so much cash at these gold prices that I think you're going to see a lot of return of capital in the way of dividends, stock buybacks, debt reduction. So the balance sheets are getting cleaned up, and I think you have the chance that going into next year, if gold prices stay high, you'll see a whole new group of investors coming into these stocks that are focused on return of capital, similar to the way the oil producers, they attracted a whole new shareholder base after the debacle and the fossil fuels being thrown out of a lot of large portfolios, and they had to attract a new shareholder base. And most of those are people who are there because of the return of capital, not exactly agnostic on the industry, but for the most part, there for the higher return of capital. And I think you're going to see that now in gold stocks. Having said that, if you're down the food chain in the exploration area, it still can be very tough to raise money and attract investors. You really have to have a differentiated story to be able to attract capital.
Fantastic breakdown there. I want to talk about the Fed cutting rates by 50 basis points. Obviously, many people expected this. Do you see more cuts ahead? What will that mean for the inflation picture, if so? And do you think further rate cuts would ignite the gold price even further?
Boy, rate cuts, yes, would ignite the gold price, I think, higher. I think the real, and again, I don't, I know you interview a lot of people here who have some, it's really strong opinions about the gold market and the BRICS countries. And, our good friend Andy Schechtman, he makes a very good case for his, what does he call it, little by little and all at once. So look, things are continuing to deteriorate. I think the economy is much weaker than the numbers show up that are showing up. I think it's not falling apart, but these bogus job numbers that they put out, and a very negative trend in the type of jobs that are being created. A lot of part-time jobs, a lot of jobs going to non-U.S. citizens, and a lot of government jobs, which really uh, don't add anything to GDP longer term. It's a frightening trend when you have more and more government workers that actually the private sector workers have to support. So I think things are weaker. I think interest rates will drop, but having said that, we also have this huge debt problem and refinancing. So for the question is at what price will people want to buy all these bonds that the Fed or that the Treasury has to issue, and will ultimately the Fed have to be the backstop in buying those bonds? And I think that too, if that happens, that also is very good for gold.
Well, we're starting to see inflows into the gold ETFs for the first time in a while in the West. I want to read you a quote from Reuters. Inflows into gold exchange traded funds, particularly from Western investors, are set to rise in coming months, adding yet more positive stimulus for already record high bullion prices, analysts said. Do you expect this to be a continuing trend moving forward? And do you see this as a major driver for the gold price?
Well, look, I think that yes, I think you're going to see more Western participation. I think if you were to see a bigger pullback in the stock market, I mean, again, whether we're talking about the gold stocks or even the gold market, you just have in the marketplace today so much competition. When you talk about the gold stocks, I mean, there's a lot of stocks that are doing very well. You can own the Mag 7 and not worry about what the price of gold is doing, whether how much competition there really is from crypto and stuff. I don't know, but there's a lot of choices out there for your investment dollars, and especially for your speculative dollars. So I think we will see rates continue to be cut, because I believe the economy is weaker, and that the job picture is weaker than it appears. And but I also think that seeing interest rates drop off too much is in the face of the amount of issuance that the Treasury is going to have to do, is going to be difficult.
Well, we've seen the conflict in the Middle East heat up, a very unfortunate development. There's now speculation that the US will get involved and that Iran's oil production may be targeted. This seems to have played a role in driving up the price of WTI crude. Do you think a further expansion of the conflict could drive safe haven demand for gold?
Well, you always have that safe haven, or a premium, which tends to always contract after things settle down. But so how much of that is built into gold price right now? I don't really know. Certainly, the oil price has spiked here in the last couple of weeks based on the conflict. I mean, to wonder if the if the U.S. is involved or not. I mean, I think if you see a picture of how much of our naval fleet is in the Red Sea and around there, it's pretty safe to say we're involved. And but it's this administration is having a tough time deciding who they're really supporting, and trying to walk the fence between the Muslim population that has grown and this is not just true in the U.S., also in Europe, and that is supporting the literally the terrorists by way of of supporting Israel's enemies there. But I I don't know if Israel is going to respond with going after the oil fields or going after the nuclear facilities, or both. But if I was Israel, I think I'd be more worried about the nuclear facilities than, and if I'm going to start doing some precision bombing, I think I'd try and slow down the pace, because that would be a catastrophe if Iran were to develop a nuclear weapon.
Well, we've got a major presidential election obviously coming up in the US, seeming to be one of the more polarizing in recent history. How do you see both a Trump and a Harris victory affecting the economy, the commodities market, and the gold sector as well?
Well, I think either one of them, has plans and has a history of being big spenders. So I don't see anybody on either side. Are they talking about these deficits and how we're going to get them down? So I think as far as gold prices go, it's good for either side. Regardless of who wins, I think it's a positive for gold. I just don't see anything that is going to stop gold from continuing to rise, as long as our deficits and the inflation picture continues on the path that it's on. I mean, we're seeing inflation slow down a bit now, but if you think of inflation not as a number that's published by the by the government, and instead, the growth in money supply. Certainly, growth in money supply has started to accelerate it again, and again, it goes back to how are they going to monetize all of this debt coming up. So I think obviously I'm most focused on gold. I think that it and the other commodity that I do follow a lot is the oil, and again, I think either candidate, it's going to be a positive for the oil prices.
Very interesting analysis there. And yes, neither party is talking about cutting back on government spending as part of their platform. I want to dive into Dryden Gold now, how it fits into the picture, starting with your recent announcement on the closing of an equity financing you increased 3 times due to high demand. Walk us through that and how you plan to put that cash to work.
Well, yeah, we were very successful. It started out, we marketing this, announced it in late August, and then we saw increased demand a couple of places. It ended up being a very strong book, Jesse, in that I've spent the summer marketing up in Quebec and been up there 3 or 4 times doing a lot of marketing, and so we did add, oh boy, probably of the book, about 1.5 million was high net worth retail people from Canada, mostly from Quebec. So really good longer term shareholders that tend to talk about the stocks they own at cocktail parties, and tend to continue to buy it in the open market. We also added, some more high profile names. Bob Quartermain came in for a personal investment. And we also got a lead investment from the 1832 management group, Robert Cohen, and the Dynamic Funds, who they were the largest investor in Great Bear when that was taken out back in 2021, 2022. So it was a great book. We could continue to get demand, and while we weren't looking to raise it the third time, the names that wanted to come into the deal were just names that we wanted to have in our shareholder base. So with that, we're very well funded now, going for our exploration program, going well into next year. We also raised enough money that we can squirrel away our final payment on. We've got a $1 million payment on the land coming due next spring, and so then we'll own the property at 100%, and and not have any more future property payments there. So we've got a very aggressive exploration program, and we don't anticipate having to do any more financing unless we were to be approached by a strategic investor, a corporate partner. And if that's the case, we may open up and even expand the exploration program further. But we're really and again, people don't realize we just went public in January, so we haven't even been at this a year. So we've now secured our own core facility there north of the project, south of the town of Dryden, where we're bringing in all the old historic core. We've got our own core shack and doing our own cutting of core now, and that's been there's been some growing pains associated with putting all that together, but we're really ramping up, looking to hire some more help on the geological side, and have a very active drill program through the end of the year and into next year.
Great. Yeah. And speaking of recent news, hot off the presses this morning, as of the date of this recording on October 8th, you released an update on your drill program at the Gold Rock Project. Walk us through those results and what they mean for the company going forward.
Yeah, look, the more we drill and work geologically on this project, the more it looks like Red Lake. I mean, it's of course, Maura and Anna both with a lot of experience at Red Lake. Maura having run the exploration program there for Goldcorp for 5 years. They really understand these rocks, and we have the same type of geometry to the geology there, the same type of rock types, the same type of dikes that are controlling the high grade mineralization, and the same three types of mineralization. And in the Gold Rock camp, we're seeing all three of those mineralization types, and we have three parallel vein structures there. We call Big Master 1, Big Master 2, and then the Elora. And right now we're focused on the Elora. We have a high grade shoot there. These systems tend to be be discovered and we're lucky it's starting at surface. But these high grade shoots tend to go very deep. Our project has had very little historic mining or drilling at any kind of depth. In fact, the hole that we announced this morning was 30.72 grams per ton gold over 5.7 meters. And it was the deepest hole that we've drilled to date in this Elora structure, which is just one high grade structure that is now about 150 meters along strike. It's running 5 to 8 meters thick. And, we're down about 250 meters now with our drilling. But there's no reason to think that, and what is most exciting about this is that's the highest, it's the deepest hole we've drilled to date. It's also the highest grade hole we hit to date. The core here that was 313 grams per ton, 10 ounces per ton over half a meter in the main part of the vein there. So very exciting, and we think that if this is anything like all the other areas or mines in this area of the world, that thinking that this structure could go a kilometer to 2 kilometers deep, and and get better and richer at depth like Red Lake did, then we really are onto something. And on Elora, we've got several other targets that to the north of this high grade shoot are two old producing mines. One, the Laurentian mine, was the highest grade mine in the camp, in the whole district, and produced at 14 grams per ton, only down to about 140 meters. So we know we've got a great target underneath, where that mine was. And then again, we've targeted. We've got several targets, not just where there's existing mines, but where these cross structures are. The team has identified these cross structures as being what's controlling the gold along the main deformation zone there. Again, very much like Red Lake. And so we've got several targets. And the idea here is that, that we identify more of these high grade shoots, start to show that they go to depth. That one Elora shoot could, it could easily, if it keeps going at depth, be 300,000 to 500,000 ounces just in one shoot there. So, and we think we have the potential in the Gold Rock camp for many of these kind of high grade shoots.
Well, I'm going to put a link in the description below to the full press release for people who want to dive further into the details. I want to talk about some of the high profile investors with a stake in Dryden Gold. Obviously, these new ones you mentioned that came into the financing, aside from them, you've got Eric Sprott, Rob McEwen, and the Europac Gold Fund, among others. What did those investors tell you in your conversations? For what's their reason for investing? Why do they have confidence in the project?
Well, I think it goes, first of all, the property package that we put together and consolidated in this camp is, one of the major reasons this camp has never gotten a really good look geologically and really been explored scientifically is that the claim package was always so fragmented. So what we've done is consolidated a district size package. We've got 50 kilometers along the Manitou to Norwich deformation zone, which has been compared to the Porcupine Fault. We've got high grade gold occurrences from top to bottom along that, and all of these cross structures and regional folding that create the great gold trap. So we're just scratching the surface. What we're working on now is a kilometer and a half to 2 kilometers in the middle of the gold rock camp there. But that's like I said, we've got 20 kilometers in the gold rock camp, 7 kilometers that are on patented claims, and then regional exploration opportunities across the property. So to get back and answer your question is that, I think that a lot of the investors, they looked at the team. Eric, for example, Sprott, he was the largest investor when we sold Ely Gold royalties. So, that was a fairly easy call for me to make early on. Rob McEwen, interestingly, Goldcorp owned this property for many years and never did any work on it. Rob was always upset that they had sold it to this little company, Manitou Gold, who turned around and made a big discovery there. And so when he saw it and of course talked to Mora and, they talked Red Lake geology and the similarities and everything else, he was a pretty easy sale. And, and then Adrian Day at Europac and again, Rob Cohen at 1832 more recently, they're just seeing the similarities here to what the potential here is from where we are today, about a $15 million enterprise value to what this project could be. The optionality here is it's a pretty compelling investment. If we're even mildly successful in being, showing that we have something similar to the Red Lake district, then there's tremendous upside here. I mean, I'm not sure there's 26 million ounces here underneath along this deformation zone, but there certainly could be. I mean, we'd have the one super high grade hit that the previous operator hit of 53,000 grams per ton over half a meter. And you don't see that kind of high grade gold occurrences and the kind of, even what we saw, 313, grams over half a meter in this recent hole. You don't see that kind of grade if you're not in a very rich system. And, again, it's just figuring out where it's coming from. And that's what, our team is doing a very good job of identifying.
There's a history of buyouts in the region you're operating in. Talk to us about that history and why you think Dryden Gold could be an attractive buyout target moving forward.
Well, look, first of all, I mean, we put this property package together with the idea of it being something that a major or mid-tier would appreciate. It's a district scale play here. It's just not a postage stamp of a property. It's a lot for us to absorb, and we've got a resource pipeline, and we'll be introducing some of the new areas over the next several weeks that we're working on in the summer field program, and as we expand our pipeline beyond just the Gold Rock camp. But I think also the team we've put together on the board It's made up of people like myself who built companies and sold them. Darren Wagner, who's built 2 or 3 companies and sold them. Christina McCarthy, who just sold her Paycor to I-80 Gold. And so, we have a philosophy here. I mean, there's no question that what we think is the exit strategy for our shareholders. The question is not how, it's just when. And how much, of course. That's the how. But so the team is focused on that. The project is that the exploration program is being run that way, in a way that the majors come in and they look at it and go, geez, you guys are really doing the right thing. And we're already seeing, again, you don't have a project like this that's in such a high profile area. I mean, the infrastructure here is amazing. The Trans-Canada Highway runs right through the northern part of our property. Highway 502 from Dryden runs right down through the southern part of the Gold Rock camp. We've got access, Ontario grid power running right through the property, and again, everything lines up for something that the majors are certainly paying attention to. And, I'll tell you that if you look at the history of the companies that have gotten bought out, you'll kind of see that it all starts with some type of a strategic investment. So, for example, the Osisko mining, which was maybe the most recent one, other than Silvercrest, which wasn't, certainly not an exploration play, but a production play. But you see where Goldfields came in and they did a 50-50 joint venture to start that, and then eventually paid up and bought out the whole thing. So I think that right now you are seeing the majors and mid tiers really are very active in making strategic investments. And if you have a property that is got a chance of being bought out, I think the first step is that you will have somebody making a strategic investment. Now, we already have as our largest shareholder Alamos Gold, but we think they pretty much inherited their ownership through their purchase of Manitou Gold, who we bought the property from. So, but they are certainly very very aware of what they're doing and watching us very closely. And I think, again, our goal would be to, hopefully add another strategic partner. And I think if you look at any of the better, projects, they've got strategic investments. And, Centerra has a fund that's about $200 million specifically, to invest in junior mining. Kinross has made several early stage strategic investments recently. They understand that the market is starved, or it's a very difficult market still to raise capital for exploration companies. So if they see a project they really like, they are willing to put some money up. If it's a project and a team that they feel like they can, that their money is going to get well spent, then you will see strategic investments happening on the ones that ultimately will be bought out.
Well, I'd like to end by opening the floor to you. Is there anything we haven't yet discussed that you think it's important for potential shareholders to know about Dryden Gold?
Well, I don't think so. I think we've covered it pretty well. I think you just watch us as we, now are fully funded to continue the drill program, continue to identify these, the source of this high grade gold in this camp, and I think again to watch out for us to possibly be seeing further investment or some investment from a strategic partner. Those are the kind of things that I think are on the horizon for us. But we are going to have very good news flow. And another important part of building this up and why we've been successful, I think I mentioned that I spent a lot of time marketing this story up in Quebec over the summer. And that paid out in dividends in the financing with a lot of activity, a lot of new shareholders. And so we continue that. We just got back from the Beaver Creek show. I'm going here in 2 weeks to New York to the one-to-one conference. We've done a couple of virtual conferences, but I'll be going to one-to-one. Then I think you'll also see us being picked up by some of the letter writers. And so we're going to be attending the Metal Investment Forum in November. Maura's going to that. And then I'm going to London to market and at the one-to-one, and then off to the Swiss Mining Institute in November. Also going back to Quebec at the end of this month for another 3-day road show. So, a very active marketing schedule that, again, is a big piece of, you have to get the story out there. You can't, and you have to have, we want to build up the liquidity in the market for investors. And, it's not all about just raising money. It's about getting that stock active and moving higher.
Absolutely. Well, I'll put a link in the description below to the Dryden Gold website and social media for people who want to follow the company. Thank you once again, Trey. It's been a great conversation as always.
Great. Thanks, Jesse.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.